Hey guys, Opsec here, today with another Bitcoin update. So first off, I'll be explaining the previous update, and then I will be getting into the current Bitcoin update. So last Bitcoin update, I said the run to 32K has begun. I was wrong about that, but I was profitable even though I was wrong. Because in that video, if you watch the entire thing, I stated that in order for me to still think we're running to 32K, we have to avoid this level 27.5K. When we came back to it, that was me getting stopped out at 27.5K after executing entries below this support and resistance. So I capitalized from down here to up there. That was how I capitalized on this. And I also had some positions still from that consolidation, which I closed around here in near break even or slight loss. But the profits from the futures positions more than covered those. Right. So that is summing up the previous the previous breakdown, and all the previous updates were all me given if then statements which did not play out. So over here I said if we avoid this level, then we run to 32K. If we touch on this level, then we got lower. And the if then statement did play out. Just not the way I wanted it to. I wanted it to. I had two possible outcomes, and the one I didn't want to play out happened, but that doesn't mean I'm not. That doesn't mean I'm losing money. So, right. So now let's get into the weekly chart and let's get into today's update. So, right. So pretty much what we've been seeing so far is this being our key level on the weekly chart. We have this key level and we have this key level. These being our key levels. So up here, around here, there was bearish sentiment. After this move up, there was bullish sentiment, but I was too blind to see it. After that, there was bullish sentiment, which set the stage for a reversal, which I was too blind to because my eyes were locked onto these liquidations. Now, the key level is this one. While we are above this level, everyone is bullish. And that is according to plenty of polls that I hosted, myself and friends of mine and other places that I looked. While we are above 25K, everybody is bullish based off support and resistance, based off of structure, based off of even a retail bullish flag pattern that they're expecting to continue from here. So based off all of that, retail is bullish while we are above this level, and the liquidations of those who are longing this level are right over here. Why? Because that is the first low under this major support. So this support, if it holds, it should be protecting this low. That's how they're thinking. They see pattern recognition. 1, 2 times it worked. Third time it's going to work as well. That is human pattern recognition, which is going to get manipulated. So now, after this dump, would I say that after this dump everyone is bullish? I would say this specific moment, no. But I would say once we touch down on this level and we maybe spend a little bit of time, maybe see a slight reaction, then I'd say sentiment is definitely bullish. And all in all, it is still macro bullish. This move down is not that big of a move on the macro, okay? So right now, where is the liquidity? The sell side liquidity is over here. The buy side liquidity is up there. So what am I looking for? I'm looking for us to clear this liquidity and create bearish sentiment. So what would be a requirement for us to create bearish sentiment? We need to clearly break under this level on a weekly chart. A clear break under consists of closes, of bodies under it. So we need to clearly break under this level on a weekly chart to create bearish sentiment. We need to clear the sell side liquidity, and then we will have all the elements we need for a reversal. The elements of a reversal are as follows. They are 1, for a bullish reversal, they are 1, bearish sentiment, 2, clear sell side liquidity. If we ever clear sell side liquidity and there is bearish sentiment, then price should go up. Such as here. cleared sell side liquidity, bearish sentiment, price should go up. Over here on a daily chart, there was bearish sentiment and we cleared sell side liquidity, so price went up. Okay, so every time we clear sell side liquidity and there is bearish sentiment, price should go up. It should create a bottom, and it should use that, bottom at the very least until everybody flips bullish. Okay, so in this case, once we got above this high, everybody flipped bullish. Why did it continue beyond it? The reason it continued beyond it is because it had higher targets in mind, so it had to speed away from all of the bulls. Because, right, if people are flipping bullish over here, if price is to continue going up, it needs to not allow them to come in. Okay, so now right over here, what are my expectations? My expectations are that perhaps we'll fuck around a little bit, but ultimately I'm looking for a weekly close under here. It would be ideal if it was timed with a monthly close, but it does not have to be. That's not a requirement. I will still long it regardless of a monthly close. So I'm looking at these liquidations. Now these liquidations are telling me what to look for in terms of PD arrays. So PD arrays I will look for ideally are going to be under this and above what? They're going to be under this, and ideally I wouldn't want to see price come to here because this looks like a level people might look too long. Like an area, like a zone price people might look too long. So ideally my point of interest needs to be somewhere in slightly above and slightly below it. So ideally it's narrowed down to this range. Now, once I narrow it out in this range, it becomes pretty simple to find a PD array. I can drop down to a daily chart over here and I can see, okay, we got a fair value gap inside of here. We got a breaker block right over here. We got another breaker block right over here. But that's not the type of one that's considered picture perfect. But right over here, you got a breaker block. That is one potential point of interest. If we go lower, then you have the lower end of this fair value gap, which is anything below the 0.5. So now we can drop down to a 4-hourly chart. Take a look at this, refine it a bit. Okay, boom. We can see this is perfectly in our range, and we can use that as well. Now let's drop down to an hourly. Now on the hourly chart, which range looks more fit to be a point of interest? Is it this tight range over here, or is it maybe this range over here? Now that we have this refined range, I won't go below the hourly because price is distorted among all the brokers. So I will not use any time frame below the hourly for this. Now that we have this range, we can extend it out a little bit. Actually, I can just use the button. Now that we have this range, we can extend it out. We can go back up to a weekly chart. We can extend it out. So we have the breaker block right over here. I can delete these two lines. We have these liquidations over here. And we have our point of interest right over here. So we are looking for price to come into here, and we're looking for it to respect this. So how might you take a long on this? Personally, I won't be doing it like this, but I'll show you how you could. You could do it like this. Now, personally, what I will do, since I have such a clear point of interest and such a clear bias, then what I will be doing is as follows. What I will be doing is simple. It's going to be, I will wait for us to come into here. And when we come into here, from the moment we start getting below the liquidations, so from the moment we start getting under these liquidations, I will start dollar cost averaging into spot positions. Okay, I will dollar cost average into spot positions. So I will be buying actual Bitcoins. Now, once we get under the liquidations into my specifically defined point of interest, I will look for a reaction. Once I see a reaction, I will trust that that reaction is the bottom. And once I see that, I will execute my long position on futures with a very tight stop, likely less than 1%. And I will attempt to capture this entire move. And I will be giving myself up to 5 attempts, high risk attempts at that. So if I lose 5 high risk attempts, that's when I'm going to stop. That's my risk tolerance. And if I catch any of those with a lower than 1% stop, so if, let's just say I caught it right over there, let's just say with a stop like that, and I caught this entire move, that is 53 risk to reward. And I will allow myself 5 times to try and catch this. Either way, I will come out in profits thanks to my spot positions. Okay, so that is my plan for this. Okay, and I can show you how you could have executed this plan over here. I didn't execute it that way over here. I did spot, and I just had a futures positions also with a stop that was a bit bigger than 1%. But I'll show you how you could have executed that on this specific time where I called that bottom. So on a daily chart, I was looking for us to make our way under these liquidations, and I was looking for us to clearly break under this low, which we did. And once we did that, and we closed this candle, now you could have now we got the reaction over here as well. Now you could have started looking for a long run. This would have been a 4% stop loss for this entire move. I exited at the top of that wick at 26.2K, which I specifically called. Now, how could you have gotten a tighter stop? Well, could have just waited a bit more. Could have waited a bit more for price to retrace a little bit. And if your standard is a 1% stop, then either you would have gone filled or you wouldn't have gone filled. And let's see if you would have gone filled, or a 1% stop, you'd get filled precisely. But this is not the way I would have had my limit. The way I would have done it would have been on a lower time frame. I actually executed a long position over there, which I called in real time. But you would have looked for a setup inside of this price action, which could offer you a stop loss that is tighter than 1%. So if you look for a setup inside of that, I personally caught this one. When we went under these lows, I caught this. And I took profits on it right up here, because I said I was looking for a low resistance liquidity around up to that. And if you don't believe me, then you can go on my Telegram and you can just go back to these dates and you will find the setup. Okay, it was either up to there or it was up to here. No, it was up to there, I believe. So I executed this setup, but if it was me, if the current me would have been back then I would have definitely held a partial of that to my higher time frame targets, and I would have looked for more setups. I would have looked to enter after we saw this big dump, liquidating all of these guys, given a reaction, and then a solid bullish accumulation right over here at a level of resistance. That would be a pretty solid long as well. Maybe I'll go for up to a 2% stop loss as well, because that is also fine, right? But and then take profit on that 26.2K, which is exactly where I got out for 21 risk reward. So that's how I'm planning to execute on the next Bitcoin bottom, which I am anticipating. And in what time frame do I expect this to happen? So I expect us to come down here, probably this month. And I think by the end of July, so let's just say we're here, worst case scenario over here, I think then that in this time frame, we could see the entire move up in this time frame. I would give it 30 to 45 days. So I would give it like up to halfway through August to deliver 32K. Not right. This is also something that I can constantly update, right? Depending on what price print. So I'm not gonna get too specific with these predictions, but I'm expecting it roughly within the next quarter to happen completely. So I'm looking for this. I'm expecting this to be the best play of the quarter. But all right. So hope you guys enjoyed this detailed breakdown of Bitcoin. And I'm looking forward to your P&L screenshots once it hits 32K. Peace.